from APAC for Q1? What have you picked up?
Yeah, I think Q1 was very volatile for the region overall. I mean, the market kind of ended up sort of flat to modestly up, but I think there was a large intra-market and sector dispersion. In general, I think what was noteworthy that there was a shift from South Asia to North Asia in terms of leadership. So Taiwan, Korea, China, Asia did very well, which was our view coming into the year, because we thought that there will be a strong shift from South Asia to North Asia. South Asia has generally done well in the last couple of years, and so we think with China reopening as a huge catalyst and growth recovery coming through there, we should see the shift. I think that's exactly what happened in the first quarter. And I think looking forward, we still think the Asian market should do better by the underlying earnings, and we continue to think North Asian markets should lead here.
But there's a seasonality element that you see with Q2. You don't think Q2 would be as good as Q1?
Yeah, there is. I mean, Q2 tends to be a little bit more mediocre, which means that maybe the return expectations are a little bit more on the moderate side. So we think our overall return expectations for the full year, which is about 17% for MX Asia Pacific ex Japan markets, would be much more backloaded, which has been driven by the underlying earnings.
So the catalysts that you're talking about in your report include the Fed, China data, geopolitics, earnings, MSCI review. Yeah. It's a long list. How do you kind of put it all together in terms of seeking direction for the markets?
Yeah, I think one of the ways to kind of look at it, I would say, is, I mean, for China in particular, right? I mean, we had a strong January in China, and then the market kind of gave back those gains in Feb and March. I think the investors have been looking for confirmation that the growth recovery is coming through, and on that, I think the data yesterday suggested that's coming through. In particular, I would just point the higher than expected both trade data as well as credit data, right? And so I think that will give confidence to the market that China recovery is indeed coming through, and that should give some support to the Chinese equity markets here. And so we are overweight both onshore and offshore markets in China. Okay. And I would say the leadership could also shift as we go later into the year towards North Asian markets. In particular, I would point out Korea, because there we think we are coming in from a deep trough in earnings this year to very strong recovery in the second half of this year and into 2024. We think earnings in Korea will be down close to like 33% this year, calendar 23, but then grow close to 60% plus next year. So as the market starts to look through and to pick up in the semi-cycle into the later half of the year, that should be a catalyst for Korea.